many more companies are coming into the mainstream. Now, what we are doing in NESD is creating that mainstream, not as a feeder, but encouraging a lot of companies to improve their corporate governance, to improve their financial reporting, and as time goes along, investors too build confidence in these companies, and these companies can expand, and then they can take a decision on where to list, because they can actually list on. They now have two markets where they have a choice of listing on, should they want to list, and I believe they will list.
Okay, so whenever the NSA comes up with some kind of regulation or new rule, like
the SEC,
the SEC rather, the International Financial Reporting Standards, these companies, they also have to.
Oh yes, absolutely.
Toe the line also.
Absolutely.
Now, recently, NESD, you say you put measures in place to boost the over-the-counter trading platform at the Nigerian stock market, and you have partnered 6 clearing banks to act as settlement banks to ensure perhaps robust activities. Well, tell us about this.
What we have done is we've created a bulletin board, so to speak, which is a web-based platform where brokers can go in from any part of the world and they can log in their deals. For as long as they're brokers who are registered with us, they have access to go into this platform, into this market, and log in their deals. So they can put in offers or bids. So you're probably finishing a business meeting somewhere in Europe or in South America, and you can actually log into a market and put in your deal, register your bid or your offer, and that gets taken up by the market when the market opens. So we've provided, in one swoop, so to speak, instant access to everyone outside for as long as you're registered to operate on our market. For the settlement of the deals that go on that market, and these are deals that can either be, they can be in every asset class. So it can be in equities, it could be in bonds, it could be in, eventually, in derivatives. We're starting off with the quick kills, and first of all we're capturing the equities, and then from there we'll go into the bonds, commercial paper, and then every other instrument will follow. We then have selected or appointed some banks to act as settlement banks. So these are the banks that would ensure that there's fail-proof and smooth settlement between buyer and seller. So rather than people issuing checks to each other or making transfers on their own, there are banks who stand in between the buyer and the seller. And these are these 6 banks that we have now appointed, who would act to provide that settlement.
I know there have been transparency issues before now, and perhaps efficiency issues also. Does that address?
Yes, it does. Yes, it does. Because what it does, to a large extent, because for the unlisted securities market, a lot of the securities are in physical certificate form. And so us pairing up with the Central Securities Clearing System and the 6 banks means that we then have an integrated system that integrates with our trades. So it's a fully integrated ecosystem that allows for trades to be executed, settled, and delivered, all in a T+3, but probably going down to a T+2, a transaction plus 2 days cycle.
So will this increase volume? Or how is it?
Is
there going to be like a drastic change from what it was before now?
Yes, definitely. There's more visibility, more transparency. Where you have a transparent market, you have more efficiency. Where there's more efficiency, there's better pricing. Where there's better pricing, there are better returns to the investor. Okay,
so where are you going from here? And are you going to invest more heavily in, I know there's a lot of technology or IT involved in this in terms of the platform. So, what's the next step for you, for NESD?
Well, for NESD, we're opening this market, the formal market, on the 1st of July with the first trades. And after the opening, we will capture, first of all the private, and as I keep saying, the equities are the first ones we're going for, because there's so many of them in existence right now that don't have... Outside
of the market, okay.
So we're bringing all those in, first of all, into the market. And then the next step would be the bonds and the commercial paper, which is also floating around, that does not have an organized market in which it's being traded. And then from there, we'll then start into other asset classes. So by the end of the year, we should be trading quite heavily in bonds. We should be trading quite heavily in commercial paper as well.
You probably would encounter some challenges along the way. What do you foresee, and are you prepared for them?
Challenges are investor awareness, that there's a market out there. That's certainly a very
good
big
market,
one.
A market with good...
An organized market. Yes. Another challenge we'll see is sending out information, not sending out, but getting people to understand the information that we're sending out when we do send out information on markets and performance. We need to inform investors that we are not guaranteeing these securities because we are not a full exchange. We are not guaranteeing these securities as to the performance of the companies. What we're doing is we're making the platform available for people to buy and sell.
Okay, so I might wonder, okay, so what's the difference between this and the NSA in terms of, you're saying you don't guarantee, you're not guaranteed, well, I know the NSA can't guarantee also.
They can't guarantee either. Now, on the Nigerian Stock Exchange, they are on a stock exchange, essentially, where you list a company, the company is subject to your rules. The company has certain responsibilities to deliver some certain things to you. In an OTC, your focus is primarily to provide service to the investors. And so what we are saying is we are not providing, first and foremost, a direct service to the companies. We're providing a service to the investor by giving the investor a place to trade their shares. And I'll give you a small example of it. If you take a supermarket has an obligation to sell to it provides a service to anyone who's coming in to buy. It does not have an obligation or any kind of supervisory powers over the people who are delivering things to sell. So if you go into ShopRite, for example, and they're selling St. Louis sugar, St. Louis sugar or Tate sugar or anything, they do not have any supervisory authority over Tate or St. Louis.
Oh, what about value? They're
delivering value. They're delivering the product. They're allowing people to come in and buy and sell, and that's really what we are doing.
Okay. All right. Well, going forward, you talk about the fact that the corporate bond market in Nigeria is still not where it ought to be, but for you, is the outlook bright going forward? If you see the federal government, taking a few steps back away from that market.
Yeah, there's been a lot of talk about the crowding out effect of the government. The government issuing
bonds,
the volume of bonds that is issuing. There's also been a lot of excitement about JP Morgan and Barclays coming into the country.
That has brought giving our bonds, Nigerian bonds, more visibility as it
were. Certainly giving us a lot of visibility, which is great for the country. The only thing is, I would be very happy if it is matched with the same kind of volumes in local investments as well. You do not want your whole economy being held or an disproportionate amount of your economy being held in foreign hands, because when they decide to move out,
definitely,
it does shake the economy quite a lot, and this is money that is not going to stay for very long. It's money looking for the best,
return.
It's not sentimental. It's going to stay for a while and then move to the next place where it can get value. And I remember that we had that situation on the equity side of the market where you had maybe like 70-80% of it being held in foreign hands. Now there's more balance, and you have maybe like
local investors actually,
so.
have
local investors are coming
in. The market,
on our bond market, that has happened to a certain extent, and I think the recent increased spike in yields that you're seeing, some people are saying it's because as money is tightening up in the Western world, some of that money is going out of the country again, and as a result, it's creating a spike in our yields here. How far that's true, I don't know. I haven't seen the numbers to suggest how much of our local bond market is being held in foreign and how much of it is in local. But I think that might be a factor in it. So I would like to see a lot more local investment in bonds and equities and corporates and federal bonds.
Okay, we're going to have to leave it there. Thank you for sharing your thoughts with us.
Thank you very much.
All will go well, and of course, all the best with this trading platform as you get set to launch it July the 1st. Okay, all the best with that. Thank you so much for coming on the program. I appreciate it. I've been talking to Bola Ajomale. He's the Managing Director, Chief Executive Officer of NESD. We've been looking at the over-the-counter bonds market. Before that, we looked at the over-the-counter equities market. We'll take a break at this point.